Okie dokie. Okie dokie, everyone. First of all, can I wish every single one of you a good evening, or a good afternoon, or a good morning, of course, depending on where you are around the world. My name is James, and I thank you for joining me tonight on tonight's little webinar, which I hope you'll find informative and certainly educational. Now, before I get started, of course, I just have to say, experiencing a few technical difficulties. So some of the animations might not work very well on this webinar because it's very, very text-based, because it's a very different psychological type of subject I'm talking about today. But anyway, my apologies if the animations appear to be a little bit boring, but hopefully my voice will entertain enough. Now, tonight's webinar, okay, is part of the series called How I, okay? And tonight's based is called How I Overcame the Fear of Trading. Okay. Now, before we get to the agenda on what this webinar will cover, of course, we are talking about online spot trading and CFD trading. And with all types of trading, there is a great deal of risk. So, though I will maybe expressing opinions at times and sharing you some of my experiences and some of my knowledge, never whatsoever should be taken in any way whatsoever as advice. I do suggest you do your own research and your own due diligence and be aware of the risks involved before entering any trade. Now, with that out of the way, this hairy, wrinkly person here is yours truly. As you can tell, I'm a Brit, so don't hold that against me. Now, my name is James Trescothick, and I'm the trading educator here at Stratton Markets. I have over 20 years experience in the financial service industry. I actually started out at the age of 18. I'm now, believe it or not, 40, but never mind. I started off in the industry in mortgages, actually. It was actually a mortgage broker where I specialized in commercial and buy-to-let mortgages. I also then moved into pensions and corporate investment before I entered the trading arena nearly 13 years ago. Okay, I've traded myself, obviously, for a prop company where I traded a lot of gold through the Dubai Gold and Commodity Exchange. I also ran a floor at the Philippine Stock Exchange, and I've been sort of looking after portfolio clients for a good number of years before moving into education and sort of sharing experiences, ideas, and things of this nature. I'm a published writer. I've actually been published in several leading industry publications, including the Financial Times Advisor, The Street, quoted in big sort of industry publications such as Market Watch and several newspapers and magazines. And I'm an avid market commentator because I'm an extremely passionate man. And I must admit, I know I'm very passionate about talking about the markets. Not so trading's different, but we'll talk about that again a little bit later. So very passionate about talking about the markets, and I'm a well-known public speaker, and I've actually spoken on a number of industry events all around the world. So that's enough about me. Let's talk about what tonight we're going to be covering. First of all, like I say, this webinar is all about how I overcame the fear of trading and how you can try and attempt, and by continuing, eventually you can overcome the fear of trading. So we'll be talking about, first of all, what is fear? Then we'll be going over the 4 biggest fears in trading. Then we'll go over a topic which I know very much about, and it's one of the most difficult things every trader faces, and that is the fight between hope and fear. We'll be talking about that a lot. Then we'll be going over how to overcome these fears of trading. Then we'll briefly discuss the 5 stages a trader goes through. And then I want to share with you what I call back to basics, an idea and concept I think that can indeed sort of help and sort of assist and guide, maybe, help you with your trading. Then, of course, we'll discuss the up-and-coming educational events. And as always, we'll finish up with the question and answer session. So, what is fear? Now, these are quotes, obviously, from, as you can see, from my quotation I've used from dictionary.com. But fear is described as a distressing emotion aroused by impending danger, evil, pain, whether the threat is real or imagined, which leads to the feeling of being afraid and not in control. Fear is also the concern or anxiety and anticipation of the possibility that something unpleasant will occur. Now, that's all good and proper, but what we're talking about trading here, James. So what's the biggest fears of trading? Well, let's start off with the obvious, and that is, of course, the fear of losing. Then, funny enough, the next one after that is the fear of missing out. That is followed by a very human trait of fear of not being right. And finally, and this is the big one, and again, we'll go into depth a lot about this because it's where a lot of traders really tend to fall down, and that is fear of letting a profit turn into a loss. Now, fear of losing, that's obvious. Nobody likes losing their money or losing in general. But fear of losing, when you have that fear of losing, you'll tend to see it has several outcomes. The main one being, of course, the fear of losing can actually delay a trader in making the decision on when to possibly enter or exit the market. By not having the ability to be committed to when you should enter or exit the market leads the trader with a sort of belief that I'm avoiding potential pain, where instead, ideally, we should be really looking forward to potential profit. Now, the reality is, the fact of the matter is, losing is part of trading, and every single trader has losses. So really, and we'll go into some solutions how to try to overcome fear of losing. The answer is try to control your losses, not to avoid them altogether. Okay, so fear of losing, that's the first fear of trading. The second, and this is a big one, and this is the opposite actually of, where's fear of losing, so you hesitate about that jumping in the market, you hold back to jumping in the market, etc. Fear of missing out is almost the total opposite of that. Fear of missing out is really based upon greed. Now, FOMO, see, fear of missing out, see what I've done there, is not based upon a well-formed or a researched idea. It's based upon the desire to be a part of something that you see is moving without understanding the reasons why that asset is moving. Now, this can be extremely dangerous because instead, the opposite of that, say, fear of losing, the opposite reaction of fear of missing out, what happens is someone who reacts on the fear of missing out, they jump in blind. We're not taking into account the huge potential downside risks. They're not understanding really what is actually moving the market at that time. And those who fall prey to FOMO tend to jump in too late, when the trade is coming to an end. And here's the other thing. The decisions are based on emotion, the excitement, the greed. I want to be a part of this. I'm going to miss out. I could end up missing, that sort of thing. And it's not rational. And this can often potentially lead to a negative portfolio. The other one is the fear of not being right. Now, let's be fair. Let's be open. We're human, okay? And we all like to be right. And it's a human trait. Some of us are manly enough to admit when we're wrong, but in general, we like to be right in almost everything we do. It's a sense of pride. Now, a trader with no plan or structure wants to have nothing but winning trades. He wants to win, or she wants to win all the time. And reality is, and this is the thing, everybody's got to really sort of remember and bear in mind, okay, is that the market is far bigger than anybody. It's far bigger than you, or far bigger than corporations. So, you got to understand that you are a tiny little cog in a massive, huge machine. So the chances of you being right all the time is just never going to happen. It's the same with the fear of losing. You are going to lose. Now, the answer really is accept that you cannot be right all the time. And instead of trying to be right, you need to be safe and implement better risk management practices. Again, something we'll talk a little bit more in a minute. And the final one, and this is the one I've seen so many times in my life, and I've seen it with so many other people, is the fear of letting a profit turn into a loss. Again, this is totally different from the fear of losing, because this one is really based on memory. I'll explain to you why it's based on memory. Now, this is probably, in my opinion, one of the biggest challenges every trader faces. It's very, very, very difficult to overcome, because the fear of letting a profit turn into a loss, like I say, is based on previous experiences. And really, this is what is known as the battle between fear and hope. And it could be a major cause of why so many accounts can fall into a negative. And like I say, this is huge psychological thing to overcome. But let me explain to you a little bit what the actual battle between fear and hope is. Now, imagine this, okay? You have a winning trade in the market. And guess what? When we have a winning trade or a profitable trade in the market, we're watching it in profit, we get that little happy feeling in our belly. We're being we're successful. We got that happy feeling. But then what sneaks in to our mind is we then start to worry that any minute now, the market is going to be a beast and it's going to turn around against us. And that profit is going to end up turning into a loss. And that happy feeling we're feeling at the moment is going to go away. So we start to fear and get scared. So what do? We close that trade very quickly. We snatch, so to speak, at that profit, making a small gain. On the flip side, imagine this. We have a losing trade in the market. But this time, instead of closing the position and taking a small loss, you keep the position open, hoping that the market will turn around in your favor. And let's face it, we do this because the reason why we do, we're hoping that it's going to turn around, because we're thinking we close it now with a small loss, the market's going to bounce back and I didn't need to take that small loss. So we're hoping that it's going to return back in our favor. But reality is it doesn't return in our favor. And what happens is the loss ends up getting bigger and bigger, and it becomes a bigger loss. Now, this, as I mentioned, the battle between fear and hope, or hope or fear, whichever way you want to call it, is one of the most challenging and difficult things any trader can go through. And really, the answer to battling this is, first of all, understanding why you go through this. Okay, it's a bit of psychology for you. I hope it doesn't bore you. But look, the limbic system, easy for me to say, is the part of our brain, okay, which controls our memories, and it's also linked to our emotions. So what we do, if we remember like the times we had a winning trade and it suddenly went against us, we experience that emotion. At the same time, our memory and our emotions then remind us of the time we might have taken a small trade and then the market returned back up. So we remember these things. So it's controlling our emotions. This is what we're doing it. So the way, this is why we do it. So this is why it's the psychological battle based on memory and based purely on emotions. So how we have to really try and do it, and it's really difficult, is you need to try and switch them around. And it's so much more difficult swapping those scenarios around than obviously me just saying it. So really what you will need to sort of try and go down the route of is, when you're in a profit, you need to hope that it will go up higher. And when you're in a loss, you need to get scared that it's going to get bigger and react accordingly. Now, I'll show you something which can help you with that in a little while. But like I say, this is huge, because in the reality is, if you look at majority of trading accounts, or maybe even look at your own, you can see that maybe you can see a large majority of winning trades, but the account is still a negative balance. And that's simple. You could have 70% profitable trades. However, if you're unable to swap fear and hope around, the chances are that your account will be negative, as the gains will be small and the losses large. At the same time, I mean, you could have 30% profitable trades. And if you've got the ability to swap fear and hope around, the chances are potentially that your account could be green, as your successful trades could be larger than your losing trades. Now, as I mentioned, the battle of hope and fear is an extremely difficult thing to overcome. And it's very tough. But let's go around some of the ways, and not just the battle of hope and fear, ways we can overcome it, or how I started to look at things to help me, but ways you can start maybe looking at it and thinking it that way. Now, okay, fear of losing. First of all, let's all come to terms with the fact that losing is a part of trading. Every professional trader, every biggest investor has never won everything. Every trade has been successful. No, they've had losses. Okay, it's as simple as that. All right. So you must understand, losing is part of trading. So one day you're going to lose no matter what. The best way of fighting this is, first of all, come to terms with it. And secondly, never trade with more than you can afford to lose. And implement it. Sorry, spell mistake in there. My apologies. Risk management. There's a famous saying, again, this is not advice, it's a saying which is in the industry, which is, control your losses and the profits will take care of themselves. That's what the saying is, okay? And this isn't really the case of when you have the fear of losing, accept it and control it, and don't put more in that you can afford to lose if worst case scenario happens. Fear of missing out. Again, going back to this is more of an emotional thing. Take out the greed and the passion from your decision making. Okay. Instead, use patience and research your idea. Understand possibly the fundamentals behind your idea or the technicals behind your idea. Also, at the same time, take your time. Use limit orders, stop losses, and understand this is especially the Forex market is 24 hours, Monday to Friday. Okay, it's the biggest market in the world. Okay, so there's always opportunities, always fresh opportunities, always fresh movements in the market. So say you've missed out on one, doesn't mean you missed out for good. You missed out on that. There's another one down the line. There is, tons of opportunities. So understand there's always new opportunities. So don't rush in and become part of the herd before you understand it. Okay, understand, okay, so what? I've missed this one. I could have, worst case scenario, I could have lost a lot because I didn't understand what I was getting into. I was being too emotional. So I'll wait for the next one or think of a new, fresh idea. So understanding that will fight the fear of missing out. Fear of not being right. Again, understand that no one is bigger than the market. You will not be right all the time. Comes to terms with it. And understand that being right does not mean you will be in profit. Again, being right is also very similar to controlling your losses. Again, it's down to obviously implementing risk management. Implement risk management, having a plan and a structure to your trading. And say the final one, like I say, we've gone in quite a bit about that. The fear of letting a profit turn into a loss. Understand the emotions you will go through. Understand you will go through hope and you will go through fear. You will experience that. Understand why that happens, and really to try and help you control those emotions. And we'll cover that in one of my segments in a minute. Start keeping a trader's diary. Develop a trading plan and keep to it. No matter what, keep to it. Now, again, I apologize for the animations because it's supposed to be coming up one at a time, but I've got a technical hiccup. But like I said, the show must go on, so ignore it. It's quite text-based. But anyway, ignore the failure of the animation, but never mind. Now, trading psychology, there's 5 stages that traders will go through, and I will go in a lot more depth into these stages in later webinars I will do. But these are the 5 stages. Stage 1. You have the unconscious incompetence. Again, that's easy for me to say. Unconscious incompetence. This is when someone who has no knowledge whatsoever into the market just jumps in and places a trade. And obviously there's 2 scenarios there. A, they lose, Or worst of all, they win and then they start to think it's easy. Okay, that obviously doesn't last, because then they move on to the second stage of conscious incompetence, is where they start experiencing losses of the unconscious incompetence stage and realize perhaps it's not so easy. Perhaps I should start to know a little bit more. Perhaps I should start reading about technicals, fundamentals. This is a conscious incompetence stage, because what these individuals do is they think, I tell you what, the secret is understanding this technical analysis, or the secret is buying an expert advisor, or the secret is doing it this way. And they do all this research and start learning about it, but they still lose, and it's not working for them. So what they end up doing, they end up blaming the market, they end up blaming the broker, they end up blaming the trading platform, they end up blaming everybody. And the reason why I had this underlined, again, it was supposed to be fancy animation, but it didn't work, but never mind, is because this is the stage most traders stay in. They stay in. And I'll have a couple of questions to ask you. You can ask yourself to see if you're still at this stage. Okay. Most traders stay in, and what happens, they never get out of this stage, or they give up trading. But the third stage is the awakening moment, when the trader suddenly realizes actually there's a lot more to it than just understanding technicals, fundamentals, market sentiment, things of this nature. They realize, maybe I've been trading with emotion. Maybe I need some sort of plan. Maybe I need some sort of strategy, and maybe I need discipline. And that moves them on to stop 4, conscious competence, where they do start putting a plan and implementing it. They keep to it religiously. They're still stressed. They're still worrying about it because it's their plan. They're learning to run with their plan. Then finally, hopefully, they'll get to stage 5, which is the unconscious competence stage, where it just comes second nature. And they're not even realizing that they're sticking to their plan or their structure. It just comes like second nature. But like I say, so many people or so many traders really, they get stuck at stage 2, which is the conscious incompetence. And very, very few people can move out of that stage. And let me ask you, see if, ask yourself this. See if you're still at this stage. Ask yourself a question. When you're trading, do you stick to a plan? Do you use emotion? Do you get emotionally attached? Or do you get excited, overly excited, or emotional? Do you flood, your chart with hundreds of indicators, moving averages, Bollingers, statistics, trend lines, you name it? Do you, and this is important, do you take responsibility for your losing trades? And do you have some form of trader's diary? And now, if you answer sort of no to any of those questions I've just asked there, then unfortunately you are still at that conscious incompetence stage. But as they say, how to solve a problem is identifying a problem exists. So this is something, once you're aware of that, then you can maybe start taking stages to move away from it. And this is one idea which I think it's what I call back to basics. Okay, back to basics. Back in the day, before obviously the online trading arena started with platforms and things like this, if you wanted to trade stocks or trade options or done anything of that sort of nature, you had to have the broker. And what you would do is you wouldn't be able to see the charts or the ticker yourself. You would phone up a broker, you phone him up and go, hey, Bob, it's James. I want to place a trade on gold. I think it's going to go up today. So I want to, and Bob will ask you, what rate do you want to buy in at? And you'll go, I'll buy in at, say, $1,206 an ounce. Okay, great. Where do you want to put your stop loss? I'll put my stop loss at, so say, $1,180. Okay, where are you going to put your take profit? Okay, I'll put it at. I'll tell you what. Let's go for 1234. I'm pretty bullish on it. Okay, this is not advice. It's just an example of a story. Okay, so you place the order. He would fill in a little ticket, and bang. Okay, if the market hit that level and did that, straight away. So you knew straight away where your take profit was, where your stop loss, and you took basically all the emotion, pretty much all the emotion out of the market. You know, you thought about it, you gave him the numbers, you gave him the entry, you gave him the take profit, filled the ticket in, he went away, and the market went to there, then potentially you would buy in on that. Okay. Now, what we have, of course, with online trading, we have charts flashing at us, we have currency rates flashing at us, we have news breaking, we have, you know, all these sort of alerts happening, fundamentals breaking, constantly coming at us. And it can be quite overwhelming, really overwhelming. You know, we get flooded with this visual information that, you know, we're human, we get excited or we can lose our way. So what I'm saying is back to basics is what you do is you can still use these indicators, these fundamentals, these things like that, but instead we take our time with it and we write some sort of form of trader's journal. Now, don't look at all the gumph, all the written stuff in it. It's just something I've just quickly typed up to give you an example. So where I've done the stop loss, where I've done the take profit and all that, and the reasons I've put in the reason box, ignore it. It's just examples. It's just something I've just chucked in here. But let me explain to you how the theory goes. The idea is when you're thinking of placing a trade that day or trading the market, you enter the date first, you enter the instrument first, you enter the direction you think that asset's going to go first, you enter the entry level you want to enter the market in, you enter the stop loss, you know, so you control your stop loss, so you know straight away how much you have the market at risk, and you set your target. Okay. Then you write your reasons behind your opinion or why you think that asset's going to go in that direction. Again, this is just rubbish examples I've just put in there. So nothing, just as an example. But for example, the reason why I put Super Mario press conference, suspected dovish tone, you know. So your reasons why you think that's going to happen. Okay. And the secret is you write and you fill in all those boxes first before you click trade now. It's not exciting, it's slow, it's morose, it's, you know, it's time consuming. But by doing that, it's actually making you think about your actions properly. Okay, it's actually making you calm down. It's making you think logically instead of being stuck in emotion. And you're doing it, you know, you're doing it in a very strict, disciplined manner. Okay. And the other good thing about using something like this is then you can look back over, say, the last trading week or trading month, and you can look back at what has been successful for you. You know, what maybe indicators worked for you, what fundamentals worked for you. So you already got a journal. So already you can see what is working for you, what's not working for you. Maybe there's a particular currency pair, for example, you have maybe a particular better understanding of than something else. It's no truth because nobody could know everything about anything all the time. So of course not. But, you know, so by using the back to basics approach, I think you sort of can really start to control the battle between hope and fear. At the same time, it can make you sort of slow down a number of the other fears you have, and it makes you take a more rational approach, not such a passionate approach. Now, up and coming events. Okay, this was this was a short one because it was a very wordy one. I didn't want to bore you guys too much. But other up and coming events we got for the rest of August. First of all, 14th of August, I have how I started to learn about support of resistance. That's going to be a lot more technical analysis based. We'll go over how to calculate support and resistance. We'll go over some indicators that can help you, what support and resistance are, some sort of trading techniques other people have used on trading support and resistance. 21st of August, this is a big one. This is going to be a very big webinar. It's going to have a lot more meat and potatoes on it, a lot more material on it, because it's going to be a case study on gold. Okay, how I started to understand gold trading, because myself and gold, we have quite a special relationship. Okay, I've traded it myself, like I said, through Dubai Gold and Commodities Exchange, and it was actually the very first asset I ever got involved in. You know, give you an idea, back in the day when I first started, it was trading around about $578 an ounce, long time ago. You know, and then obviously at that time I watched it go all the way to 1900, and obviously now it trades around 1202, I think the last time I looked. So yeah, so I'll go into a little bit of history in the trading gold, and that's going to be a big one. a big case study. So those gold traders out there, definitely come along to that, because we'll be covering an awful lot of material on that one. And then linked into this one tonight, we'll be finishing the month off with how I learned risk management, which again is something I think is extremely important. So we'll be going over that, talking about that, how ways you can sort out your stop loss, your take profit ideas to that, and we're going a lot more detail on that. Now, before I move on to questions and answers, feel free to obviously speak with me. Email me at james@strattonmarkets.com, or indeed you can message me or contact me on my Twitter, or follow me if you like. I say talk about the market every now and then. And at the same time, please email me if you have ideas for topics on other webinars you'd like me to do in the future. If there's subjects or areas you want me to cover, if you want me to cover Elliott waves, for example, I will do one on Elliott waves. Or whether you want me to cover, I don't know, any particular subject, or do a case study on so more FUD. Or let's say you wanted me to choose a particular asset to focus on. Please email me and let me know. Now, before we go on to questions and answers, again, like I say, we are talking about online trading, spot CFD trading. This is really for informative purposes and educational purposes only. I do suggest you do your own research and your own due diligence and know the risks involved before entering any trade. Now, with that out of the way, let's go to any questions at all. Anybody have any questions for me at all? Any questions? Anyone? Anybody have anything I discussed today? Or is there any topics that somebody would like me to maybe discuss in the future at all? Hello, hi there. Nice to meet you. Welcome. Thank you for coming. Did you enjoy it? Do you at least find some of it informative? Thank you, Sue. Did you enjoy it though, Sue? Nice to see you again, Sue. Glad you came back. Did you find it useful? Oh, good. I'm glad you found it useful. Excellent. Thank you. Oh, thank you very much. I'm glad you enjoyed it as well. Artemis, nice to see you as well. Brilliant. Thank you. That's good. Well, make sure you come to the next one, Sue. I'd like to see people come back. And like I say, don't forget anybody who ever wants to, like I say, please share your thoughts or feedback. If there's something you want me to cover, you want it to be a bit more longer or a bit shorter. Okay, so an interesting question. Is it true to say all major pairs that come down will go up again? Well, there's the old saying, whatever goes up must come down. And there's always that thing of boom, 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 bust. But again, the question is when something's going to go back up or when something's going to go back down. At the end of the day, currencies and commodities tend to trade in trends. Okay, is it either an uptrend or a downtrend? The secret is trying to work out if that trend is continuing or is that trend going to reverse. Things of that nature. There's no guarantee that something was at one asset was at one price several years ago and eventually will go back to that, because intrinsic value on assets change. It's a case of trying to predict or try and speculate where that asset may be valued in the next couple of years or next day or so, depending on your trading style, if you're a day trader. Is there any other questions? Thank you very much, Lena. Great webinar. Thank you, James. Very kind of you. Thank you. Is there any other questions at all? Did everybody at least enjoy it a little bit, though? I know, well, obviously Lena did. Thank you, Sue. Obviously found it useful. Anybody else find it useful? Okay. If this is the case, please feel free to email me if you have any suggestions on future webinars or future content or future areas you want to cover. Or if all of a sudden, if you suddenly remembered you have a question you want to ask me, feel free to email me and contact me. Okay, I'm always here. And please keep a lookout for future webinars I'll be doing every Tuesday. So if there's no other questions or nothing else anybody likes to say, can I just say thank you so much, everybody. Every single one of you attended tonight. It's been an absolute pleasure. And can I say, depending on where you are, can I wish you either a great evening, great afternoon, or great morning, like I say, depending where you are around the world. Till then, until next time, you guys and ladies, of course, all of you, trade safe.